So the NextGen economy will obviously have a substantial impact on how insurance pans out. This is because of two primary reasons, right? First and foremost, if you look at the folks who are categorized as next gen today, they are folks who are born after like 2000, right? So in about 10 years' time, they will pretty much form about 40 to 50% of India's population. And all of these will typically be in the age groups of about 30 to 40, which effectively means that they are the ones who will be effectively calling the shots. So ignoring them is suicidal. So they are going to play a very, very critical role in the way the economy actually pans out. Now, what as insurers we need to do to kind of make sure that we are keeping pace with them? I think we need to understand the way they think. And today, there are 3 or 4 very, very distinct things that the Gen Z actually has going for them. I think first and foremost, authenticity, right? So today, absolutely nobody who's a Gen Z, wants to see fine print. I mean, what he sees, is what he wants. He doesn't want any disclaimers. So I think products to that effect will become a lot more simpler. I think the second thing which the next gen is actually looking for is a way easier DIY journey, which is a do-it-yourself journey. And today, they believe that they are bold, they are empowered, they want to kind of do stuff themselves. And as a result, they will probably kind of go out there and literally do it themselves. And if they're doing it themselves, the UI UX that we currently have is not going to suffice. It will have to be at a level which is substantially better than what it currently is at. So that's, I think, the second thing. I think the third thing, again, when it comes to Gen Z, is hyper personalization, which means that every customer, will want a product which has been made just for him. In fact, I was having a conversation with my son, and he's 23 years now, so he fits into that cohort. And it's very interesting, actually. It's kind of a story which I'll actually share with the audience. So I was actually sitting at home, and we were discussing some product ideas, with the head of product development in my organization. And we were saying that this is one feature, this is another feature, we can add this, we can subtract this, and this is how we will come up with the product that we really want. And what he actually came up and told me is that, why are you developing a product, for somebody else? Why can't he develop his own product? And, this is just an example, right? But this is how things will change. I can almost envisage that, you will have this, web page, wherein you will have various styles. And, the Gen Z will actually be doing a drag and drop. He'll say, premium payment term, मेरे को इतना चाहिए, sum assured मेरे को इतना चाहिए, medical करना है, नहीं करना है, etc., and literally create a product by himself. So that's hyper personalization for you. So I think, again, little bit of blue skying here, but a lot of changes will kick in. So there's a clear positive. I mean, if the FDI is going to get increased to 100%, there are chances that, more of the foreign players will actually kind of come in. And if they come in, to that extent, India does get more capital, the industry expands, and so on and so forth. So I can't see any negatives in the FDI actually moving from 74 to 100 if and when it does happen. Having said which, we must be cognizant of the fact that today India, and especially life insurance in India, is a distribution-led business. And today, if there is no distribution, the chances of success to that extent reduce. Now, if somebody is coming in with 100% FDI, it effectively means there's no headroom left for an Indian partner, which means that distribution to that extent will get compromised. As a result, sustaining could be a challenge. So while it's a welcome move and it can only help the industry, it can't be deterrent to the industry. I'm not really sure whether it will have a game-changing impact on the industry. So insurtech is like the new buzzword, right? So everybody's kind of talking about insurtechs and the likes. I think it's important. Today, like you rightly said, a lot of the insurance companies are collaborating with insurtechs. We get solutions which are very, very quick. We get solutions which were some solutions which were not even envisaged, maybe 3 years or 4 years back. So I think they complement each other, and InsurTechs as a cohort will continue to thrive, and work very, very closely with industry manufacturers like us, so as to provide a good customer outcome. There is no straight answer to that one, because there is no singular risk per se. In fact, call me an eternal optimist, but I always look at the positive side of things. India is a massively, massively underpenetrated economy when it comes to life insurance. We are at about 3%, to GDP penetration. The global average is at about 7%. We have a lot of headroom. I keep saying that life insurance is and has always been a sunrise industry. So I think the industry will just expand. The industry will just grow. I think from a regulatory standpoint, a lot of initiatives are being taken which are very, very customer friendly. The intent is to actually move insurance from a push product, which is to a pull product. I don't see any, risks which are, meaningful and large, which can impact the, the fortunes of the industry per se.